Let's start with the US M2 money supply. M2 measures the total liquid money in circulation, including cash, deposits, and short-term savings. As we can see, the US money supply is pushing back toward all-time highs. Historically, whenever M2 expands rapidly, it means more dollars are chasing the same goods and assets, which ultimately weakens the dollar's purchasing power. And for Bitcoin investors, this has always been a key macro driver, because when fiat is being diluted, scarce assets tend to benefit. But this isn't just an American story, it's happening worldwide. Take a look. China's M2 has already hit new all-time highs, reflecting continued liquidity injections. Japan's M2 is hovering close to its peak, consistent with decades of easy money policy. And in the Eurozone, M2 has just printed a fresh ADH, with a sharp surge in the last 2 years. This tells us that global liquidity is still expanding, and fiat currencies across the board are being diluted. For long-term investors, that's a powerful backdrop for assets that can't be printed, like Bitcoin. And that brings us to this chart, the long-term trade-off between fiat and Bitcoin. The green line represents the declining purchasing power of the dollar, while the orange line represents Bitcoin's long-term value trajectory. Over time, as central banks print more money, the real value of fiat trends down, while Bitcoin, with its fixed 21 million supply, trends in the opposite direction, rising in value as scarcity meets growing demand. This is the macro story in one image. Fiat loses value through inflation. Bitcoin strengthens as the digital alternative. If the current trend in global money supply continues, Bitcoin remains one of the clearest long-term hedges. Next up, Ethereum is forming a descending broadening wedge, which is typically a bullish continuation pattern. These structures suggest that sellers are losing control, and when the breakout comes, price can resume its larger trend upward. If ETH breaks out of this wedge with volume, it could be the start of the next leg in Ethereum's uptrend. Over the last 3 days, a single wallet has purchased over $300 million worth of ETH, all through Galaxy Digital's OTC desk. When institutions move this size off exchange, it often signals long-term positioning rather than short-term trading. OTC transactions like this are designed to avoid impacting the spot price, but historically, large accumulation events often precede major market moves. Big money is making a very big bet on Ethereum, and retail traders should pay attention to where smart money is flowing. Here we have Ethereum against the US dollar, and this chart overlays the classic Wall Street psychology of a market cycle. After a long decline, Ethereum appears to be in the disbelief phase where many traders are convinced any bounce is just a fake out. If the cycle continues, the next emotional stages are hope, as price begins to recover, optimism when traders start expecting a sustained rally, belief and thrill as the market accelerates into its parabolic leg, and finally, euphoria, where new highs create peak excitement and often mark the top of the cycle. Understanding where we are in the psychology cycle helps traders position ahead of sentiment shifts rather than chasing the market once a crowd is already euphoric. Here we have AVE on the monthly time frame, and the super trend indicator has just flipped to green. This is significant because a monthly super trend flip often signals a long-term trend change. Combined with the current market environment, AVE could see sustained upside if buyers continue to step in. Here we have SU against the US dollar and is trading within a well-defined ascending parallel channel. Notice how previous tops around $2.20 and $5.30 align perfectly with the upper boundary of the channel. If this pattern continues to hold, the next major resistance target could be around $14 per coin, which would represent the next phase of this cycle's uptrend. Parallel channels like this often act as trend guides, where the midline provides interim support and the upper boundary signals potential exhaustion zones. For traders, the key takeaway is clear. As long as price stays within this channel, the trend remains bullish, but always watch for volume confirmation and potential pullbacks near resistance. Let's take a look at Dogecoin's long-term price cycles, and the pattern is almost uncanny. Each cycle has followed the same geometric structure: sharp correction in red, accumulation in blue, explosive breakout in yellow. In past cycles, we saw mind-blowing returns: 5,800% in the first breakout, over 21,000% in the second. Right now, Dogecoin appears to be midway through that blue accumulation phase. If history rhymes, the next stage could be the blow-off top, the final parabolic move that completes the cycle. While nothing is guaranteed, these repeating structures are exactly why traders keep an eye on Doge during every bull market. This chart compares Mudeng's current price action with Dogecoin's 2020 fractal. We can see a similar structure forming, a period of accumulation followed by a sharp breakout pattern. While fractals aren't guarantees, traders often watch them to anticipate potential momentum phases in speculative assets. Bitcoin is currently setting up for one of the most significant bullish retests in its history. Take a look at this long-term ascending trend line. Rejection 1 happened back in the 2017 bull run top. Rejection 2 occurred during the 2021 peak. Now, for the first time, Bitcoin has broken above this multi-year resistance and is successfully retesting it as support. Historically, when a major resistance becomes support, it signals the transition into a new market phase, often the parabolic leg of the cycle. As long as Bitcoin holds this retest, the macro bullish structure remains intact and could pave the way for new all-time highs. Looking at the Bitcoin cycle chart, we notice a repeating 4-year structure. Halving event, 12 to 18 months of bullish price action, a final blow-off top. If this cycle remains consistent, we could be entering the late stage of the bull run, with potentially 3 months left before peak euphoria. It's a reminder for traders to manage risk and watch for distribution signs as we approach this window. Lastly, this is the Bitcoin dominance chart, which has been respecting a long-term channel since 2017. When dominance breaks down, it typically signals the start of alt season, where capital rotates from Bitcoin into altcoins. A confirmed breakdown here would suggest a shift in market dynamics, favoring high beta altcoin plays over BTC. Take a look at this long-term Bitcoin cycle chart. We can clearly see how each major market cycle, 2017, 2021, and the projected 2025 peak, has respected this ascending trend line of all-time highs. 2017 topped out right at the line, 2021 touched it again before the bear market began, and now, if history continues to rhyme, the 2025 cycle top could push as high as $315,000 per Bitcoin. The pattern also shows that after each peak, Bitcoin forms a rounded bottom before the next surge. While no projection is guaranteed, these long-term structures help traders and investors understand where we are in the cycle, and why macro patience often beats short-term panic. From the Socialminity from the excess of Bitcoin insistent. Here's the Bitcoin liquidation heat map over the last 3 days, and there's a clear setup forming. Price is currently hovering just below a major liquidity pool around $115,000. These bright yellow and green zones represent clusters of stop orders and liquidations, areas where the market is likely to move quickly once triggered. If Bitcoin makes one solid push into that zone, we could see a fast liquidity grab that sweeps 115K, and if momentum carries, the next potential extension target is around 117K. Traders should watch for volume spikes as the market moves into this zone. That's often the signal for a short squeeze or quick rally. Remember, on the daily scale, price action is chaotic and noisy, full of sharp moves that can shake out impatient traders. Zoom out to weeks and the noise starts to smooth out. Trends become clearer, but volatility still shows its teeth. By months, patterns begin to emerge. Temporary corrections look like small ripples in a larger uptrend. When we step back to years, the market often looks like a steady climb, ignoring the day-to-day fear and hype. And over decades, the story becomes obvious. Long-term conviction and patience turn market chaos into clear upward growth. The lesson: the longer your perspective, the clearer the trend. The market is entering a potentially explosive phase, with Bitcoin dominance on the edge, meme cycles heating up, and institutions quietly stacking BTC and Ethereum. In moments like this, guidance matters more than ever. We don't just call trades, we guide you through them, helping you navigate the late stage of the cycle with patience and precision, without falling for FOMO. Join Legends Pro, link in the description.